Your very first $50 might not look like much, but what most people don't realize is that this tiny starting point often becomes the moment everything changes. Not because of the amount, but because of the decision behind it. The decision to stop waiting for the perfect moment, stop telling yourself you'll invest later, and instead take control of your financial future right now with whatever you have. And that's exactly why today we're breaking down how to invest your first $50 in a way that's simple, practical, and designed especially for beginners who might feel overwhelmed or unsure where to start. And if you're new here, welcome to Smart Cash Academy, a space where everyday people learn how to grow their money one small, smart step at a time. No jargon, no pressure, just real strategies anyone can use. A lot of first-time investors think they need hundreds or thousands of dollars to begin, but the truth is the hardest part is simply making the first move. And $50 is more than enough to build a foundation. In fact, starting small helps you learn without fear, experiment without risking too much, and develop a habit of investing that becomes far more valuable than the $50 itself. So imagine this: instead of letting that money sit in your wallet or disappear on something forgettable, you redirect it towards something that grows for you in the background, something that compounds, something your future self will thank you for. One of the easiest and lowest stress ways to begin is with micro-investing apps. These platforms are built exactly for beginners, people who want to start investing without needing to analyze charts, pick winning stocks, or figure out complicated strategies. With just a few taps, you can deposit your first $50, and the app automatically invests it into diversified portfolios. You don't need to know what to buy, you don't need to time the market, you just choose a risk level, and the app handles the rest. For someone brand new, this removes the fear of choosing wrong, and the best part is the habit it builds. Many of these apps let you auto-invest small amounts, $5 here, $10 there, and over time those tiny pieces add up. It's not just an investment, it's a system supporting you even on days you forget to think about money. As you grow more comfortable, the next natural step is exploring fractional shares. In the past, you needed hundreds of dollars to buy expensive stocks from companies like Apple, Amazon, or Tesla. But fractional investing changed everything. Instead of buying a full share, you can buy a piece of a share. So if a company's stock is $200, you don't need $200. You can invest $5, $10, or your full $50. This allows beginners to own parts of companies they believe in without saving up large amounts first. It turns the world of big-name investing into something accessible and fun, and gives you the chance to learn how markets move in real time. And it's incredibly empowering to say, I'm not just a consumer of these companies, I'm an investor in them. Once you understand how fractional shares work, you naturally begin learning about index funds and ETFs, which are some of the safest, simplest, and smartest investments for beginners. Think of an index fund or ETF as a basket that holds many companies at the same time, sometimes hundreds, sometimes thousands. By investing in one single fund, your $50 instantly spreads across a whole portfolio. You're not betting on one company to win, you're betting on the entire market to grow over time, which historically it almost always has. This is why so many long-term investors love ETFs: low cost, low stress, and highly diversified. With $50, you can buy fractional shares of famous funds that track the S&P 500, the total stock market, or even specific industries you believe in. And every time you add more money, you're building your own portfolio automatically. Of course, not every part of investing has to involve risk. Some beginners prefer a safe, steady place to store money while they learn, and that's where high-yield savings and cash management accounts come in. While these aren't traditional investments, they're extremely valuable for two reasons. They grow your money faster than a regular bank account, and they prepare you for investing by building a financial cushion. Putting your first $50 into a high-yield account might not feel exciting at first, but it's one of the smartest decisions if you're someone who wants to reduce financial stress before jumping into the market. And earning interest with zero effort builds confidence that your money can grow even when you're not actively doing anything. For people who want the easiest, most hands-off experience possible, robo-advisors are a perfect next step. These platforms act like automated financial planners. You deposit money, they design a portfolio based on your goals, and they manage it for you, rebalancing, reinvesting, and adjusting automatically. With just $50, you can start building a long-term investment plan without needing to understand the stock market in depth. This is particularly powerful for beginners who want to start investing but don't have time to research or worry about what to buy. Robo-advisors let you be an investor without feeling the pressure of doing everything alone. There are also additional beginner-friendly approaches that can complement your first $50. Some platforms let you invest in fractional bonds, giving you access to traditionally stable, low-risk assets. Others let you explore automated dividend reinvestment portfolios, where any dividends you earn are instantly used to buy more shares, helping your growth speed up over time. And if you're someone who loves learning by doing, you can even start a simulated or paper trading account alongside your real $50 investment. This lets you practice, experiment, and understand the market without losing any money. The goal isn't to become an expert today, it's simply to get comfortable. As you keep building, you'll notice a shift in your mindset. What once felt confusing or intimidating starts to feel empowering. You begin to see money differently, not as something that comes and goes, but as a tool you control. And every time you add another $5, $10, or even another $50, you reinforce that shift. You start developing a long-term perspective. You stop trying to get rich overnight and focus instead on growing slowly but consistently, which is exactly how real wealth is built. And this brings us to the most important point of all: the amount doesn't matter. What matters is the habit, the discipline, the decision to invest even when the amount feels small. Every professional investor, every millionaire, every financially successful person you admire started with their own version of a first step. Yours just happens to be $50. And that is more than enough. You're not behind, you're not late, you're right on time. So as you finish this video, I want you to imagine looking back a year from now. Imagine seeing that first $50 grow into 100, then into a few hundred, then into 1,000. It won't happen overnight, but it will happen if you start now and stay consistent. Your future wealth is built by the choices you make today, not someday in the future. And today, you have the opportunity to make one of the most important financial choices of your life starting, because that small step, that single $50 decision, is the beginning of momentum. It's the beginning of ownership. It's the beginning of financial confidence. And it's the beginning of your journey toward becoming an investor. You don't need to be perfect. You don't need to know everything. You just need to begin. Take your first $50 and put it to work. Your future self is already cheering you on. And today you took the first step. Keep going.